In the United States, the average cost for single-family residences has seen a modest increase of about 2% to 3% compared to the same period last year. While there are a few regional markets still searching for their lowest price points, the majority of areas have experienced a rise in home values over the past year. However, a 3% rise in property prices isn't particularly noteworthy. It's more or less equivalent to a steady state, especially when you take inflation into account. Median prices are down a fraction. Currently, the average cost of single-family homes across the United States stands at $444 to $900. This figure represents a slight dip from the previous week and shows a 2.4% increase from the same time last year. There are two key insights to glean from this data on home pricing. Firstly, at a national level, there's no indication in the data suggesting a decline in home prices. Simply put, headlines claiming a drastic drop in home prices should be taken with a grain of skepticism. While some specific locales like Austin, Texas, or the condo market in San Francisco do show a downward trend, this is not the case on a nationwide scale. Secondly, it's crucial to understand the consumer response to shifts in mortgage rates rather than the absolute figures themselves. In the previous year, mortgage rates surged remarkably, rising 450 basis points from 3% to 7.5%. It was during this time that we observed a significant drop in property values. A critical factor that could lead to a further decline in home prices would be a substantial increase in mortgage rates. For instance, if rates were to exceed 8% in the first quarter, this could indeed exert downward pressure on prices. Before we delve deeper into this fascinating topic, a quick reminder, if you're enjoying this discussion and wish to stay informed with more insights like these, make sure to subscribe to our channel. Now let's continue exploring the intricacies of the real estate market. Price reductions at normal rates. In typical real estate markets, approximately 1/3 of properties undergo a price reduction. Currently, about 38.3% of listings have experienced a cut in their asking price, which is above the usual rate. This trend is indicative of the current challenges in affordability. It mirrors the impact of elevated mortgage rates and the rapid rate increase that occurred in September and October. Inventory is declining for the holidays. The current market lists 546,000 single-family homes available for purchase, marking a slight decrease of 1.75% from last week. As the holiday season approaches, it's typical to see an inventory reduction. However, compared to this time last year, there's a 2% increase in the number of homes on the market. In recent months, as mortgage rates climbed, so did the inventory. Now, with rates stabilizing, we're observing a downward trend in inventory as we move into the new year. Despite the correlation between inventory levels and mortgage rates, there's no indication of an overwhelming influx of sellers. An excess of sellers would negatively impact home prices, suggesting a potential drop due to oversupply. The slight increase in both listings and sales is a positive sign for the housing market. It indicates a gradual recovery from a particularly sluggish year. This recovery is understandable as buyers adjust to mortgage rates hovering around 7%, bringing stability that encourages market activity. Home sales have significantly declined in 2023, a 30% drop from 2022, leading to a cold market. However, recent trends suggest a halt in the decline of home sales, with an anticipated rebound in 2024. This week witnessed a 6.4% rise in new contracts compared to the same period last year. Yet overall, there are still 1.3% fewer pending contracts than last year, with 279,000 single-family homes currently in the pending stage of sale compared to 282,000 the previous year. These figures represent transactions that are likely to be finalized soon. While current reports may continue to reflect a contraction in home sales for a few more months, the transition toward growth seems to be taking shape, as evidenced by the emerging trends in the market. As we wrap up our discussion on the trends and predictions for home prices, it's clear that the real estate market is constantly evolving. Navigating through these changes requires not only understanding current trends, but also mastering the foundational principles of successful real estate investment. For those keen to deepen their knowledge and truly thrive in this dynamic field, our next video, 6 Keys to Thriving in Real Estate, is an essential watch. It delves into the critical strategies and insights that can transform your approach to real estate investment, whether you're a seasoned investor or just starting. This video will equip you with the tools and knowledge to make informed decisions and capitalize on opportunities in any market condition. So if you're looking to build upon what we've explored today and take your real estate acumen to the next level, make sure to click on the video now appearing on your screen. Discover the keys to not just surviving, but thriving in the world of real estate.